Morning everybody, it's Chris here from Serene Education with the 4 majors and update for the 2nd of August 2012. Hi guys, hope you had a fantastic day yesterday. A lot of movement, but let's have a look and see what's been happening overnight and what could we expect for the remainder of this week. Okay, let's have a look at the weekly. What's been happening? How's that candle been shaping up? Well, very negative. Well, not negative, but a slight pullback compared to last week's candle, that bullish engulfing candle, which took us back to retest the underside of that all important 12,3500 mark at major support and resistance level on our weekly. Okay, and as long as it trades below that level at 12,3500, then ultimately we could see price pushing further to the downside, and that downside area, or that area we're looking at potentially, is that 1200 mark. You can see back in May, June of 2010, that area a major support and resistance level in the past. So we have definitely, if price fails to really rally and close higher than the 12,3500, all we've seen is a breakout, a pullback, and then we could see ultimately a continuation to the downside for this pair. As you can quickly see here, the intermediate trend, the short-term trend here for May, June, July, you can see that swing low, and if price comes unstuck over here, then that trend line, that intermediate trend line, could definitely be the one that it could get in the way of it. So here's the major long-term trend. Okay, you can see quite clearly, and recently, since a break in May, a major sell-off, quite an abrupt sell-off compared to previously here, through February, March, April, May, hesitation, but you can see a major break to the downside followed by a pullback and then a major move again, and it's taken us through to where we are now, trading at the underside of the 12,3500. So on our daily, must make a note of these areas here, 12,3500. Put these lines in, support and resistance. Always plot your support and resistance. Your major support and resistance levels, they will dictate where price is going to, or likely to go to, and how much you're likely to see in terms of movement. In this case, downtrend, bearish, make it nice and red. You can see quite clearly here, since the beginning part of June, we had a hesitation through June, a nice little bounce, then a corrective break below July resistance, and then since then prices made lower lows, however always reverting to retest the underside of 12,3500, and in doing so failing miserably, especially the last couple of days, the last 1, 2, 3, 4, 5 days in particular, price testing that major support and resistance level here at 1235, and not one of these candles able to actually close higher. Yes, one particular candle here trading higher through that range, however closing lower, and you can see the sentiment the past couple of days pretty much falling off. We've seen a bearish engulfing followed by a slight pause, and then a bearish engulfing yesterday, cancelling out that move we saw the day before, and then this morning an Asian session, small trading range, very small trading range, pretty much indecisive, spinning top size, and that's primarily because today and tomorrow we have a hell of a lot of news out. We have interest rates announcements for both Europe and sterling, and we also have the non-farm payroll, the unemployment claims before the non-farm payroll figures tomorrow for the US markets. We also have the most important one for Europe at the moment now. The current issue is Spain, and we have the Spanish 10-year bond auction. And that's tentative, and they can come out any time this morning, in particular GMT. So that's going to be an important one to watch, because Spain is in a lot of trouble. We all know that, and it'll be interesting to see what the Spanish 10-year bond auction yields are. If they are negative, then you could see clearly there's a problem. If they do manage to sell the lot that they're expecting to, then fantastic. If not, then it just goes to show that there's a major issue long term for this particular. So okay, so Europe, as you can quite clearly see, the last 5 days trading under a major support and resistance level. Our CTC is very much negative. We do have a blue candle arrow, apologies, but we do not have, that's just telling us we should see potential for a pullback. Yes, we are seeing that as we speak. However, we do need, if this is to be a genuine pullback and a change in direction, we do need to see 12,3500 being broken soon. Our 4 hour, let's have a look at the 4 hour. 4 hour, we still have that institution moving average above price, and funny enough, straight above the 12,3500 mark. So clear resistance there. Okay, the institution, the governing moving average, as long as we're trading below that, then ultimately sentiment is going to be negative. You can quite clearly see the CTC is telling us that. And relative strength, I plot the relative strength just to give me an indication of the sentiment is a genuine positive or bearish sentiment, and you can quite clearly see that we've had a consolidation at the underside of 12,3500. Yes, it was bullish for a while, Okay, that sentiment was generally looking positive. However, you can see it's dipped below the 50% line just recently over the last 16 hours or so, and you can see that we are starting to see red candle, and everything's looking positive for downside. So what do we need to see in order to see further downside for this particular pair? Well, if we do a fib projection, you can see the all-time high in May to the sell-off in early June, then the pullback to these highs in mid-June. You can see quite clearly that the 50% line, projection line, is in play as we speak. We do need to see price trading below that. We see a breakout, the pullback, and then the continuation lower. The next candle has to close below the 50% line, roughly around here, the 12,2500 mark. Can stay below that, then ultimately we're going to see price revert to the downside. We do need to see if there's anything out there that's definitely going to move the market to the downside if that's the case. So patience is key here. We do need to see price trading below the support and resistance level on our hourly chart, which is going to be my trigger chart. So let's go to the hourly. 12,2500, you can quite clearly see is roughly around there. You can see that support resistance level on this time frame through the 27th to 29th, 30th, 31st, 1st, etc. And you can see quite clearly now. Always put your 12,3500 major support and resistance level in. There we go. That's the one. Price is trading below that. Then ultimately we're looking for resistance, and you can see that these attempts are getting lower and lower and lower. A lot of indecision, spinning tops in particular, dojis, and a bearish engulfing candle to the latter part of yesterday's trading, going into the close of the US session last night. And you can see price of the Asian session pulling back slightly, but very, very small trading ranges, very indecisive, not giving a lot to the market. However, you can see the RSI is below the 50. Now, as long as it remains below the 50, what we need now is to see price closing below that institutional moving average here, roughly around the 12,200 mark. Get below that, and then it's plain sailing back down towards those levels, as I mentioned, roughly around here, 1205. But ultimately, our target will be that 1200, because that's going to be our major support and resistance level on our weekly and daily time frame. So you can see, if I just zoom out, you can see a lot of hesitation at the underside of 12,3500, and then institutional moving average now coming to play a lot still happening more below the 50% RSI line, not a hell of a lot on above it, and when it has been trading above it, it still hasn't been trading above that 12,3500. Okay, so very, very important. When we did get our breakout, clearly look at this, you're looking for reasons. You can see on an hourly chart, got a break above, but that candle that broke above, not a very decisive break. Okay, and then you saw the next two candles, very decisive, and then you wanted to see that correction of a support candle here, i.e. in the shape of a bullish engulfing. This candle over here could have been the one. However, you can see how it faked a lot of people in, moving higher and then closing low below that range, and then we saw price moving down. Hence the reason why it's so important to wait for candles to close. If you're going to be trading an hourly candle, that candle has to close, and then you do make a judgment on that. So if this candle had really moved that high and higher in that particular candle, but closed higher, yes, if you're looking to enter on the top of that candle, your stop would be quite far away. But that's just the nature of the beast, unfortunately. We are looking for a decisive candle. That decision, if there was a genuine breakout to the top side, because you can see the CTC was looking positive, everything was in our favor, then that's how you're going to wait. That's how you're going to play it. Otherwise, unfortunately, it didn't. And this candle here, just because we had patience on our side, would not have got us into the trade, and we would not be in a losing trade. Okay, so it's so important. Being patient in trading is very, very important. Okay, so what leaves us now is we're trading below the 1235. Fantastic, that's what we want. Now we want to see the 12200 being broken. Okay, that institution is still there. You can still price is still moving sideways. Okay, this is a consolidative range. We don't want to be trading in this consolidative range, because then it's just going nowhere. Upside, downside, upside, downside. It's not really giving us any return for bang for buck and time invested. So it's far better just to wait for a candle that's definitely going to move to tell us that this is generally out of this consolidation trend, and we should be looking for further downside. And a close below the 12200 would definitely give us that. Or wait for 123,500 to be breached, and then look for top side. That's it. Moving on to sterling, let's have a look at the weekly. Very negative week so far for this pair. 15,700, clearly a resistance level, and it's come back to bite us. Through most of June we saw resistance, and going through July, same thing. We had a number of weeks where we tested those highs of 1575, and going through to the beginning of August we've started to see further selling to the downside. A lot of our moving averages have got together now, and they've really come to act as resistance on this pair, and we've seen price lowering due to this. The major support and resistance level for this particular pair on the weekly is our 15,300 mark. This clearly a support over a number of months going back to 2010, so a lot of support and resistance levels for this pair. In fact, there might be something further back. Yeah, 2008, 2009, there's been hesitation at this level, but the major part of it, a lot of support through 2010, 2011 and 2012. So resistance here, if this is meant to be a bearish engulfing candle, then I can guarantee for the foreseeable future we should be looking at 15,300 as a particular major target yet again for this pair, and we should be looking for potential shorting opportunities going into the new week. So above us 15,700 the resistance level, and below us the major support at 15,300. So we need to put those on our daily. Okay, it's so important to know these areas on our long terms and are going into our shorter terms, because they will dictate how much price action we are likely to see on our smaller time frames. It's so important. You have to have an understanding of where price has been to in the past, because that will clearly dictate where price is likely to go to in the future, because people will be looking at them as potential target areas. Okay, whenever you get into a car, you type in a destination. It's the same thing in currencies or anything that you trade. You need to have a particular target area, limit area where you want to get your target from. That's the same as GPS. Plug it in, know where it is, because that's your target. Okay, you can quite clearly see how price, after testing these areas here at 15,700, this major support and resistance, have pulled back in the past, and in particular just recently you can see that the 1545, 1555 mark happens to be a slight consolidative range to the upside of here, and you can see that we aren't trading too far away from that range. A lot of negativity yesterday in particular after failing at 1575. So anybody who's been watching my video analysis should be in this trade. There should be no reason why you should be in this trade, because everything's stacked up intraday to tell you that we should be looking for negative sentiment. We clearly have found resistance here on so many occasions, okay, and it's done that every single time it's got to this level is pulled back. How far the pullback is likely to be, well, that's another deciding factor, but you can still see that there were opportunities for that pullback, because people have looked at this 1575 on each occasion that they've bought into this range as a target, and once they reach the target there's been selling and people have bought those selling contracts, and hence the reason why we've had the pullback. Okay, the CTC histogram on our side is still red. Yes, we had a bit of blue through here, but that blue didn't really work because you got a buying signal at a major resistance level. But it's absolutely crazy to buy over here at the underside of major support and resistance. Rather wait for price to break and close higher, and then everything would have been great, and then you could have pulled the trigger to the upside, looking at potential support and resistance levels to the upside. So a lot of selling through May down to early parts of June. Get above that 1575, 15800, then you could have looked at 15900 going into the 1600, which happens to be a major support and resistance level to the top side for us. But that never materialized because we never saw the candle closing higher. So we would never look for any buying sentiment. We'd still be looking for shorting sentiment intraday. It's that easy, guys. That's the beauty about the CTC. So if we know that 1575 is a major support and resistance level intraday, got to plot it 4 hour. I need to know when my 4 hours are trading, and there we go. So I'll plot that in my 4 hour. Oops, apologies, pressed the wrong one. Caffeine hasn't taken care of yet. There we go, 1575, and most importantly 15300 to the downside. It's important to have both these plotted on your chart, because they will dictate. You can see quite clearly here a massive trading range between 1575 and 15300. Okay, bounce, and in between all that, there we go. That's the major high in May to the low in June. There we go. You can see here there are support and resistance levels. 15,500, another support and resistance area. Price has consolidated this area. Yes, there have been breakouts, etc., but you can see there's a consolidated range in and around this area here, 23.6 fib retracement. Yet again at the 38.2 here at 5065. A lot of hesitation. Support through here, a lot of resistance, support, and further support through here. So these retracement areas become areas of major concern. You do need to know about them, because you can see quite clearly price has hesitated, and these hesitations have got high. You can see there's a bit of an uptrend forming here. So if this price is to be further Downside negative, we do need to see 1555 being breached. Okay, and if we do get a nice bearish engulfing closing lower than that, then ultimately long-term sentiment should still be guaranteed that we should be looking at potentially that 15300 down the bottom here being our next target. While 15300, while it's our major support and resistance level long-term. Okay, the CTC selling, we should be looking for negative sentiment. Red, all as a red arrow, red candles, red CTC histogram on the other side. Moving averages all above price acting as resistance. The only thing that we got to be aware of is this 15500 mark. Okay, we do have a lot of news out, as I mentioned. Okay, you have to be aware of that because fundamentally news shall direct trade. That's where a lot of people get the speculative trading. That's where the volume comes because people will be making notes of major news announcements. We do have interest rates announcements for both sterling and euro. Oh, we're going to see Merv King and the sidekicks for Bank of England dropping the interest rates. Okay, there's a lot of news out that we've had further negative forecasts and predictions that we're going to see further contractions for next year. And if that's the case, then what you would want to do is to ease your interest rates to try and counteract that. Okay, the contraction in the market, productivity, etc. So it'll be interesting to see what Merv King does for the interest rates announcements. The forecast is for no change to stay at 0.5. It'll be interesting to see if they actually drop it. But other than that, Europe has also got theirs interest rates announcement, and then later this afternoon we have the unemployment claims for the US market going into tomorrow's all-important non-farm payroll. Very, very important. First Friday of every month is non-farm payroll for the US market. Very, very important. And then we do see a lot of volatility and speculative trading due to that announcement. So over here for sterling to remain still negative over here, we do need to get below this 15500 mark. Okay, if it means giving away the next couple of days and going into the new week, and we do get that, because ideally if we do see price finding support here at 15500, then we could see price reverting to the upside. Okay, so it's so important that we do see, if this is to be genuine, we do need to see further selling for sterling. Get to these levels here, and then you have my attention. Okay, moving on to US dollar Swiss franc. Let's have a look at this particular pair on the weekly. Last week heading into that all important 1000 mark, which happened to be parity for this particular pair, and a major support and resistance level on our weekly charts. If you've just put these lines on here for you to see, and if I zoom out, you can quite clearly see through parts of 2009 in particular, then going into the end of 2010, 2011, and hence, because of this being a major consolidation area here, the support and then resistance in the large sell-off, we should be well aware of that area as going into this, because this would generally be, if we are buying through August, September, or the start of April going into this area here, this will definitely be a major target area, and that coincides quite nicely with that institution period moving average, still above price on our weekly. And most importantly, you can see the CTC recently after this nice buying sentiment heading higher into that area here as our potential target. So if that was the low to the high here before the pullback, 61 into the 100, see that major support and resistance level in this particular area here of trading. So very, very important. You've got to be aware of it, because that will definitely be a particular area where, you know, price a lot of the positions will be closed, heading into a major support and resistance level. Sure enough, last week in particular, into that, and then we've seen selling, and that caused the bearish engulfing by the end of the week, engulfing this hesitation here going into this level. And then this week in particular, we saw a bit of a sell-off to start with. However, we've seen a bit of correction going into Thursday today. So if we look on our daily time frame, for example, got a plot on that one, because that one is generally major resistance level above us. Excuse me, guys. There we go. Let me just type this all in, so it's imperative you guys see exactly what it is that I'm seeing. Okay, so that's a major resistance level. You can quite clearly see a couple of days ago, almost the start of last week, buying into that. However, bearish engulfing at a major resistance, we saw sell-off, and that sell-off took us back to a prior support over here, this little hesitation area, and then consolidating. And that consolidation is a prior resistance level. Prior resistance, resistance, breakout, support, support, support at 970. Okay, so that's a major support and resistance level to the upside. Got to be aware of these areas. It's so important. So you've got to be making notes of these particular support and resistance areas over here. And the 970, which happens to be the 38.2 Feb retracement or projection level. So there we go. It's another area where we need to put our major support and resistance level on. So you make these areas nice and dark, because the price is falling back here. If you're looking to short this intraday, that would be your long-term target intraday, because that's where we've been to in the past. So that's a major resistance. Price failed at this area consecutively, so that's going to be a genuine area of where potential people, if they're selling over here with the bearish engulfing at a major resistance level, that'll be their target. Okay, and if they found support here, then we're going to reattempt these highs. And you can see price going backwards and forwards between these 2 points here, and consolidating range at the underside of a major support and resistance. If we'd seen price close lower than that, then we should see price revert to the downside, testing the 23.6. A bit of hesitation on this level here at 960, followed by the major swing area, which is around here at 945, where the institution would potentially catch up as price moves sideways. Okay, you have to be aware of this. There we go. From those lows in August of last year, you can see the upside trend on this particular chart here. The major upside trend is still up. CTC is telling us we should be looking for up. Moving average for the institution, moving average below price, acting as support for this pair. You can quite clearly see support, and we're now bouncing higher over the past couple of days, heading into the last 2 days of this week. Very important, because US dollar against the Swiss franc, we're going to see the news really reflect on this particular pair. And you can see the CTC telling us we should still be looking for negative, positive sentiment. We do have a red arrow, however, telling us we've seen consolidation, and we have seen consolidation because we're still trading at the underside of this major support and resistance level. That's only going to happen. So what could we see here? Potentially, well, it could see potentially a head and shoulders film. This is one shoulder, the head. We could see a potential shoulder yet again if the US market data comes out and it's negative, and things really don't stack up for the US market, then you could see potentially for price to fall, the US dollar to fail against the Swiss franc, and we could see price pulling lower. However, if we do get a head and shoulders here at a major resistance, what we'd like to see is particularly this 970 have been breached, which will take us below this downside, the upside trend. So break below 970 is what we're looking for if this is potentially be a major long-term resistance level. However, you can see positive sentiment buying, seen hesitation, bearish, bullish engulfing, hesitation, bullish engulfing, slightly tentatively moving to the upside. I don't feel that if we don't get a break above the 61.8 here at the 987 mark, we won't see these highs back up here at the 1000 being targeted again. So it's imperative that we get to see that being broken as soon as possible. Otherwise, I feel we could see sentiment moving from more of a positive stance to a negative stance. We move into our hourly, 4-hour chart. You can quite clearly see a major support and resistance level above us. Going to make a note of that. Okay, and that 970 is that other important support and resistance area for this particular pair. There you go. You can see prices hesitated at this particular point in the past. Very, very important. Got to make a note of it. Okay, so prior resistance, breakout, and lots of support once we've got above this. So in this consolidated range, upside favored because it's still above the institution moving average. CTC very much blue. There's more blue on this particular chart than red. We do have red on here. However, that's failed to materialize to the downside. We did say 940 was another particular major strong. See here, pull back, not trading lower than that. So if you're looking at selling this, you'll be selling into a major support, which would be a no-no. So it would rather be far better for you to wait for a nice close below 940 if you're trading this time frame to look for further downside sentiment. The projection here, lows in May to the highs in June, to the pullback range in mid-June. You can quite clearly see these fib projection levels, and look at that 38.2 smack bang at 970. Okay, very, very important to realize that if we get a close below 970 and the 38.2, then we can generally look at 960 as first target, second target down here at the 940. However, you can see the institution moving is still below price, so it's still being supported. Even though we're seeing a pullback, we're still being supported. It's still in a positive consolidative trading range. Okay, it's so important. We're going to see pullbacks, but as long as it stays within a certain range in that long-term scheme of things, then we could see profit taking followed by a reattempt, profit taking by a reattempt, and we could see a potential reattempt as long as we stay above 970. If we get below 970 very abruptly or quickly, then we could see that sentiment generally looking downside favoritism. But until then, we should be still looking for price to test those topside moves. You can see the last about 12 hours ago, we had a nice bullish engulfing count taking us above this range over here at the range was the 50% range. As long as it stays above the 50 now, above this 980, then we could see the US dollar trying to make gains against the Swiss franc for the remainder of this week. If it gets below this range again, then we should be looking for selling sentiment. Okay, I'm putting a chart together. It's important. So what is the hourly telling us? What is their sentiment looking? Well, you can see through the sell-off over here on the hourly, RSI was pretty much trading below the range, the 50% line, which told us it was negative sentiment, and you can see the institution moving average still below price. Above price. My apologies. And we need to be aware of that, because if the institution moving average is above price on an hourly, then it's going to dictate that price is going to be bearish sentiment overall. So 970, need to make a note of that. Okay, that's a major support and resistance level, and as long as it's trading above that, then we could see price reattempting the highs. Okay, we do know that 1000 above us is the major support and resistance level, long term, weekly and daily. Okay, because we've been there before, and you can see now we are trading in a range. Sometimes not really making any bang for buck, sometimes moving higher with a bit guts up, but you can see over the past couple of days, price is trading below the institution moving average. That's a negative sentiment call, but the RSI is trading higher than the 50% line. Okay, for this to be positive upside for day, going into a lot of news announcements with non-farm payroll and unemployment figures today, in particular before the non-farm payroll figures tomorrow, it's imperative that we get above that institution moving average. Okay, get above it, and above this area here at 987, got to be aware of 987, there we go. Then we could see price reattempting those highs at 1000. Okay, so our hourly, there we go. We need to get above the institution plus the 987, and then we could be in this area here where we could see price re-tagging that all-important high here, the major support and resistance high above us. Okay, but you can see quite clearly we are consolidating in this range. Resistance, 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 resistance. Further support once we got above that range, the 987. However, price has been capped to the upside by the institution just recently, plus we got this one. So there's a lot of resistance above price. Okay, so there's a lot of things acting against price to the upside. Okay, we do have blue, 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 blue. Everything's blue on our hourly. However, the thing that's not that the actual items that are stopping price from moving higher are the institution moving average and the all-important 987 over here. Once we get above these two over here, for example, then we're looking at plain sailing to the upside. Okay, we've got to be aware of that. Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly. Very indecisive week last. Very indecisive doji. And this week, going into Thursday, yet another doji. So very indecisive for this pair. If you're trading long term, you'll be scratching your head going, ouch. Very indecisive, not a lot of return for your money or time invested last week. But we do have support and resistance levels being broken just recently. You can see I'm plotting my major support and resistance levels. I know them because I've been looking at these particular pairs for a number of months now. So they're just figures. 8400 a major support and resistance to the top side for this pair on a weekly chart. Clear resistance through going back to 2010, 2011, and then through to 2012 March. Major support and resistance level consolidated range at 80 through the same period, October, November, December, January 11, 2010, 2011. Consolidated range August, September, October, November, December, January of 2011 and 2012. So a lot of support through here, and then breakout trading. You have to be aware of these. See how the price has been moving within these points, and then within these smaller points we have further support and resistance levels. Noticeably the 78 here resistance as we went into the squeeze over here, a very bearish consolidated range, and then as long as price went sideways there was a likelihood for price to start finding support, and sure enough we got that. And you can see once we've broken on the hard right edge over here, for example, we'll be making money. You can see a lot of hesitations once we broke through this major support and resistance level to the underside. The CTC was telling us we should still be looking for negative sentiment, and you can see price falling away, but trading between two ranges here, in this particular case the 80 and the 78, which happen to be this price support and resistance level here. So heading into the 78, finding support, those contracts being sold. However, not many people wanting to buy them because they know that the sentiment is still generally lacking any substance to the upside. So on our daily we need to plot these areas. Very important. You see I'm building I'm putting together a chart. I'm building a picture now, a mental picture on my charts of where major support and resistance levels are. I do need to be aware of them because they're going to dictate, as I said to you, where I'm likely to see price moving towards, and I can use them as my target areas. If I don't have an idea of where I'm going to, then how the hell am I going to trade? Okay, so it's so important to be aware of these areas. You can see I'm plotting them. Okay, so 8400, a major support and resistance to the top side. 80, a major support and resistance level near term, and any targets to the downside, because we should still be looking for negative sentiment, would be 76 if and when that 7800 is being broken. So you can see I have 4 different areas here of major support and resistance. Okay, so I say to myself, where's price trading relative to any major support and resistance levels? Well, you can quite clearly see here on a daily, we're trading right at one right now. So bearish sentiments, everything, all the moving averages above price is telling me I should be looking for negative sentiment. However, I can't see any further selling opportunity here because we've found support over the last week. So selling is out of the question. Okay, only until such time as that 78 has been broken. Okay, I don't want to be selling into a major support because then I'd be absolutely nuts. That's just setting myself up to fail. Okay, and I don't want to do that as a trader. I'm here to make profit, not to give my money away. Okay, so looking at this setup right now, I say to myself, well, if I'm looking for selling sentiment and I'm trading into support, then I should be looking for potentially buying options, buying opportunities intraday, because these are major support here. We've had indecision, indecision, decision, indecision, indecision. There's a lot of support through here, but I can see that price has been kept shorter term. You can quite clearly see we haven't really moved higher, and you can see there's a lot of resistance near term in around this area here. What is that? 78. Where price is trading right now, 78.50. Okay, so got to be aware of that intraday. So if I break down into my smaller time frames, i.e. the 4 hour, and I'm going intraday, I need to be aware of these ranges. You can quite clearly see support, resistance, 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 potential resistance. You can see hesitation in the last 8 hours, spinning top at a major resistance level because we've hesitated here in the past. CTC on either side still telling I should be looking for negative sentiment. Okay, I'm well aware that 78 has been a major support area for this pair because it tells us on our support and resistance levels on our weekly and daily that there's a major support, and you can see hesitation from the 23rd onwards right through until August. A lot of support over here. Prices bounce, but it's never really taken that any higher. Okay, the intraday support trend line, you can quite clearly see, has been breached just recently. Okay, got to be aware of that. The trend line is still negative. We do need to break out of this range at 78.50 before we could see anything moving higher. Very, very important. How high would it move? That remains to be seen. Well, if we can get above 78.60, then we can generally target another support and resistance level on our intraday time frames, roughly around, you can see clear hesitation at roughly the 79.20 mark, which would bring us back towards that institution moving average. Okay, so if this is to see a definite confirmation bounce higher here, we do need to see a blue arrow, blue candle followed by blue CTC on the other side. The CTC at the moment now still telling us red, but I can guarantee if we get above the 78.60 here, we could potentially see that going blue, and then we could see a definite target area being the upside favoritism here around, roughly around the 79.20. So rather bide your time, be patient, get a close above 78.60 here, nice bullish engulfing, then we could definitely target, could see potential for price to move towards that 79.20 back towards the institution moving average. You can clearly see here there's a lot of support through this pair here. Okay, a lot of support over here too, so this becomes an area here where price does need to break and close higher than, get above that, then it's plain sailing to the upside. If we don't get a break above that, well, then we could see price consolidating with an outlook for potentially 78 being retested quite soon. That's it, guys. Hope you have a fantastic trading day. Enjoy it. Keep it as simple as I have. Build a picture, guys. We want to see a picture. Let price dictate where we like it to go. Make sure it's, and just be aware of major support and resistance levels. Okay, that's what we want to do. People are looking for these breaks, or these support and resistance levels, following market trends. Okay, we want to go with the positive or negative sentiment, the big boys. Okay, we don't want to be trading speculative trades, very small indecisive ranges. We want to be trading decisiveness. And the more decisive these breakouts are, the more likely it is we're going to see the big boys that are trading and moving the market. That's what we want to go with. Okay, we want to capitalize from that movement. So, a lot of support for you guys on the charts. If you guys have any issues, please, you know where to contact us. All our students. Otherwise, all you guys out there that are watching these videos, I hope they are bringing some light to your trading or adding to your trading. And I'd like to see some of you guys joining us on our webinars going forward. If you want to know when the next webinar is going to take place, please visit our website at www.sereneeducation.com for further information. Other than that, be aware there's a lot of news today. factor it into your trading. I can guarantee you're going to see a lot of speculative trading over the next couple of days. It's going to get itchy and scratchy, especially with the Spanish auctions later this morning. That could be quite an interesting one to follow because of all the issues we are seeing in Spain recently. That will be a deciding factor. Otherwise, if you're not trading, rather wait till next week. Let the market show us a hand and then we'll trade that. Otherwise, have a fantastic trading day, and I'll see you next week, Monday. Nicky and I aren't in tomorrow because it's non-farm payroll. We do not trade non-farm payroll day, so we classify it as a long weekend. Otherwise, happy trading, and I'll see you first thing on Monday morning. Until then, trade serenely.